The Australian economy slows, raising hopes that the rate cycle might be coming to an end. Prime Minister Anthony Albanese says he won't change tax rules around the family home, and solar panels about to become the biggest energy source in the nation. It's Thursday, the 2nd of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, your interview today, straight after the show, is an interesting one. You're speaking to Dr. Luke Reid, the CEO of Microba. Now, Microba has benefited from the MedTech Accelerator program, which is an initiative of the Brisbane Economic Development Agency, a supporter of this podcast, but it's a really good story.
It sure is. I find out all about microbiome science, which I had no idea about. And the fact that Brisbane's becoming a bit of a medtech centre in Australia. And anytime I talk to people like Luke Reid, I find that I'm learning so much. It's not my area of expertise, obviously, but it's just a fascinating chat about the progress in medical science that's going on.
Yeah, it is a good one. It's worth sticking around for. It's coming up a little bit later on. The main story this morning, though, Sean, is a big one. Higher interest rates look to be biting the Australian economy, with growth during the December quarter coming in at just 0.5% and monthly inflation readings lower than expected.
The economy expanded not quite as quickly as most forecasters thought and was down from 0.7% in the September quarter. The annual growth rate was 2.7%, but clearly the economy was slowing towards the back end of that 12 months. Now, consumption and net trade, think higher commodity prices, drove the quarterly result. One really notable fact out of the figures yesterday was that household savings have fallen, well, at least the savings ratio has fallen from 7.1% of income to 4.5%. Federal Treasurer Jim Chalmers said that the Australian economy is moderating as expected and is the inevitable consequence of global challenges, high inflation and rising interest rates. The national accounts show that consumer prices rose by about 1.5% during the December quarter. Now, yesterday, the monthly consumer price index indicator was also released by the Bureau of Statistics. It rose 7.4% in the year to January. Now, that's compared to 8.4% in the year to December. You put the national accounts consumer price figure in and the monthly CPI figure in, and it just does look like inflation is coming off the boil. Certainly Chalmers said he's hopeful inflation has peaked. He's probably right. I suppose the question now is how fast it will come down.
Sean, you know I'm a fairly competitive person. You only probably need to listen to the weekend edition in order to hear just how competitive we are. So I would like to know how Australia compares to other parts of the world, because this has just become a competition globally.
Well, sort of. I mean, remarkably well. We are growing faster than most other major economies, about twice the pace of the OECD average. We're kind of about where the US and Canada were late last year, well ahead of the UK, France, China, certainly ahead of Germany, which actually went backwards at the end of last year. But the recent run of data hasn't been as encouraging. Jobs growth was negative over November and December. December quarter wages growth was less than expected. In other parts of the world, there does seem to be a bit of a pickup in economic momentum. Maybe, Michael, local rate rises are doing a better job of taking the steam out of the economy, and that's not a bad thing, of course. Of course, this run of weaker data will be noticed by the Reserve Bank, and it means it's closer to ending the rate hike cycle. Now, the market still expects 2 or 3 rate hikes, but though it's amazing after yesterday's economic growth figures, people started talking about 2, maybe 1, rather than 2 or 3. So certainly it will put pressure on the Reserve Bank to slow the rate hikes.
Sean, it feels like you didn't think much of my attempt to turn global economic growth into a competition. It feels like maybe I'm trivializing things a little bit.
Yeah, the problem is, do you want to be growing fast or not? Because if you want to be growing fast, you're going to get more inflation, so interest rates will rise. So there's a good argument to say the slower you are, the sooner interest rates will come down. So that's the race you want to win.
Oh, that is fantastic. Because for a moment there, I thought it was like, I felt like I detected this undercurrent in your voice of like, oh, God, this is what I have to put up. This is what I have to put up with.
Here we go again.
Yep. Anyway, how did local markets respond yesterday?
The S&P ASX 200 closed down just a touch to finish at 7,252 points. There was a bit of movement among the large caps. Rio Tinto was up nearly 4%. BHP jumped 2.7%. Fortescue Metals Group was up 2.5%. Now, that was all on the back of strong economic data out of China. I'll tell you about that later in the show. But really, it was the big miners who saved the ASX 200 from ending the day in the red. The banks were sharply lower, with Commonwealth Bank, National Australia Bank and Westpac all down at least 1.5%. The slower than expected growth rate and potential for a slowdown in rate rises works against the banks. Another notable was Telstra yesterday. It fell 2.6%. Gold Diggers, Ramelius Resources and Perseus Mining were among the best of the top 200, while Link Administration was the worst, down nearly 6%. Now, earnings season is over, so it goes very quiet in corporate land the next couple of weeks. Something, Michael, you'll be very upset about. I know that. But there's still a bit to be excited about. Yesterday, AMP says it's going to push back the date of the sale of its domestic real estate and infrastructure equity business to Dexus. Why that's important is because this sale is kind of the last piece of the splitting up of AMP, which of course was a one-time blue chip company. Anyway, that's been delayed. One of the other interesting corporate news stories yesterday was about David Thodey, the former boss of Telstra. He's now the high-profile chair of Tyro Payments, which has had a torrid time of it. Tyro's had a torrid time of it. Anyway, David Thodey's resigned.
Well, Sean, the next couple of weeks, I'm looking forward to it. It doesn't take much to get me excited.
No.
International markets, what's going on?
The Aussie dollar fell to its lowest level in 2 months after the economic growth figures were released. It hit a low of 66.93 US cents. But this strong data out of China caused a jump in the dollar. By the afternoon, it was trading more like 67.5 US cents. The price of gold jumped nearly 5%, hence the strong performance of the gold miners. Oil was up as well.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has ruled out removing the capital gains tax exemption on the family home as the government really scrambled to contain the pushback from its decision to lift taxes on superannuation accounts worth more than $3 million.
Yeah, he was pretty emphatic. I'm going to quote him. "We are not going to impact the family home, full stop, exclamation mark," he told ABC Radio yesterday. Albanese said it's a bad idea and no one has raised it as a proposition. Now, earlier in the day, Treasurer Jim Chalmers didn't quite sound as emphatic. He declined repeatedly on breakfast television to categorically rule out targeting the capital gains tax exemption on the home. Remember, on Tuesday, the government said it will double the tax rate from 15% to 30% for superannuation earnings on funds above $3 million. During last year's election campaign, the government promised not to touch super. Now, Mr. Albanese yesterday said he wasn't breaking a promise because the tax rate wouldn't kick in until July 1, 2025, which is after the next election. Not sure about that one.
That sounds like you might have found a little loophole.
It does sound like a loophole, doesn't it?
Indeed. Now, just staying in Canberra, Sean, Federal Infrastructure Minister Catherine King was at the National Press Club yesterday and she said the shortage of workers in infrastructure is only going to worsen.
Yes, given infrastructure is critical to economic growth, it's an important story. The sector's down about 94,000 workers, and King said that's expected to peak at 112,000 in September. Now, the most severe shortages are among engineers, surveyors, project managers, and labourers.
Sean, Telstra boss Vicki Brady has begun outlining her strategy over the next decade for the telco, nominating growth in services to agriculture and non-traditional telco markets as a key focus.
That's right. Brady, who took the top job less than 6 months ago, also wants to position the company as a major partner of tech companies. This is all about Telstra becoming a services company and less of a goods company, less of a company that sells phones, more of a company that provides services to businesses and consumers. Brady said Telstra is more willing to work with rivals on initiatives in the years ahead and aims to broaden its revenue base across industries as digitisation increases, according to a report in the Financial Review. She said Telstra needs to work with other companies, and she mentioned a bunch of the tech companies, and develop new skills itself to add layers of technology products and services on top of its networks. Now, she talked about a plan from the Australian Farmers Federation. The AFF want to go from $75 billion in production today, that's annual, to more than $100 billion in 2030. Telstra thinks that's an opportunity to deploy so-called Internet of Things technology and other digital technologies. So Telstra wants to work with the rural sector to improve output.
Internet of Things is such an interesting term, and I feel like it got a bit of a bad rap early on because it kind of became synonymous with, remember how there were those early model fridges that were connected to the internet and you could apparently kind of like
Yes.
get it to order your milk for you if you ran out, but it never seemed to catch on.
No.
Whereas the Internet of Things is much, much bigger than that.
The Internet of Things, if the infrastructure is in place to allow it to happen, will literally change society. But we're nowhere near there yet.
So it's more than just a screen in a fridge.
Yeah, more than a screen in the fridge. That's right.
Just a wee bit. Now, Sean, if you need to refinance your home loan, maybe because you're rolling off a fixed rate loan, it's clear that the big lenders are happy to negotiate and do a deal.
Yes, in fact, some of the big banks are offering up to 1% off loans for existing customers in an effort to prevent them from switching. There's also cash offers, there's free NBN. Some banks are offering loans for as long as 40 years. Remember, there is billions of dollars in mortgages rolling off ultra-low fixed rates this year, and the home lending market is very competitive. Now, that's for a couple of reasons. It's a cheap source of funding for the banks to make loans, therefore they're very competitive in it. Also, there are lots of other providers. The banks are fighting for every single home loan. Now, among the most aggressive have been Macquarie Bank. Its owner-occupier home loan book grew by 23% over the past year. Pretty good. NABS was next best, up 10%, followed by Commonwealth Bank, Westpac and ANZ. The moral of this story, Michael, is that there are deals out there, so customers shop around.
Yeah, good advice. Sean, I mentioned this one at the top of the show. Rooftop solar is set to become Australia's biggest power source in the next couple of months as household installations surge. This is quite incredible.
It is. There are 3.4 million homes and businesses with solar panels now. They produce about 20 gigawatts of power. Liddell Power Station in Victoria produces more, but when it closes in April, solar panels on rooftops will become the biggest supplier of energy. Isn't that incredible? Now, the take-up of solar panels has surged since 2008, in part due to some pretty generous government subsidies. Also, panels have become cheaper, but more recently, sky-high energy prices have encouraged people to go solar. So soon, our number one energy source will be solar panels on rooftops.
And one more, Sean, before we get to international news. Downer EDI's Chief Financial Officer, Michael Ferguson, has resigned from the contractor 2 days after the group cut its full-year earnings guidance and 2 months after the group disclosed accounting irregularities.
Yes, back on Monday, the stock fell 24% after its half-year results, and investors demanded meetings with the services group's board. Long-time Downer Chief Executive Grant Fenn, who's run the services group for more than 10 years, retired after the company reported its half-year results. He's been replaced by Peter Tompkins, the former Chief Operating Officer. Now, Ferguson, who's been Downer's CFO since late 2016, said he's going to leave over the next 6 months. That means 2 of the company's 3 most senior execs are walking out the door. Not a good look.
No. All right. International news now, Sean, and some good news for Australia's miners. Factory activity in the world's second largest economy has improved more than expected, sending regional share markets higher.
The Manufacturing Purchasing Managers Index, that's a mouthful, rose to 52.6 last month, according to the Chinese equivalent of the Bureau of Statistics. Why do we care about that number? Because it's the highest reading since April 2012. A gauge of non-manufacturing basically measures activity in services and construction, also improved. Now, both indexes beat economists' expectations. It is pretty much the first clear evidence that the Chinese economy is rebounding post the COVID zero policy. That's part of the reason, of course, why the big miners in Australia did so well yesterday. Also part of the reason why the Aussie dollar bounced back after those economic growth figures.
Finally, Sean, we have saved a pretty incredible story. This is, I don't even know what to make of this. Vladimir Putin is reportedly living with his gymnast girlfriend at a vast, heavily guarded country estate featuring several palatial mansions, because clearly one is not enough, a room coated in gold leaf, and a playground for their young children.
Yes, Alina Kabeva is a 39-year-old former Olympic rhythmic gymnastics champion. Of course she is. She's long been linked to the 70-year-old Russian leader, according to the Telegraph of London. Kabeva lives in a villa on Mr. Putin's estate about 400 kilometres northwest of Moscow. The Russian president has reportedly bought his lover a property empire worth $120 million through a slush fund in Cyprus, according to an organization called The Project, which is a Russian investigative organization. The place is nearly 1,200 square meters and the mansion is built entirely of wood. There you go. Why are we talking about this on Fear and Greed? Too good a story to leave out, Michael.
Of course it would be made of wood. It was bought through a fund in Cyprus.
Oh, good work. Oh, I like that.
Thank you.
That's well done.
Thank you. I'm pretty proud of myself right now. Let's wrap this up before I embarrass myself. Up next is the Fear and Greed Daily Interview. Dr. Luke Reid, the CEO of Microba.
Yes, all about how Brisbane is leading the way in medtech at the moment, and particularly about Microba and what it's doing to advance gut health. It's a fascinating chat.
Yeah, it certainly is. And really, it kind of goes back to that point that you made at the top of the show, Sean, about how Brisbane is becoming a medtech centre in Australia. And of course, the Brisbane Economic Development Agency is a supporter of this podcast. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 2nd of March, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. Don't forget as well to check out our other podcast, How Do They Afford That?, which is out every Wednesday. The new episode this week is all about manifesting. I'm a very big skeptic when it comes to this, but the episode is very interesting. I'm Michael Thompson, and that was Fear and Greed. Have a great day.